This is Horizons Middle East and Africa, our top stories this morning. Asian stocks trading cautiously to start a week dominated by central bank decisions, including a likely cut from the Fed. U.S. President Donald Trump raising potential antitrust concerns over the Netflix-Warner Brothers deal, saying their combined market share, quote, could be a problem. And Abu Dhabi Finance Week begins this morning. Joining us this hour, Stephen Dainton, President and Investment Bank Management Head at Barclays, Hani Kablawi, BNY's Head of International, as well as 91's Middle East CIO and co-head of EM Corporate Debt, Victoria Harling. Plenty to get ahead this morning, but for now, it has just gone past 9 a.m. across the Emirates, 7 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi, and as we mentioned, it is quite a packed week with central bank decisions. Of course, the Fed is one of those major economic events that we are waiting for later this week. The expectation is a quarter-point reduction, but still quite a lot to pay attention to in terms of what we hear from Federal Reserve Chair Jerome Powell, as well as a number of other central bank decisions that are coming this week, including Australia, Switzerland, and also Canada. But if we just take a look at where markets are positioned to start this Monday morning, we're seeing U.S. equity futures marginally up on the day following a week where we did see most of the major indices closing higher. As we mentioned, of course, that quarter-point reduction, expectation of a quarter-point reduction, from the Fed later this week, potentially providing some upside for U.S. equities. We have the U.S. 10-year yield up on the board right now. We're seeing it unchanged right now with the U.S. 10-year yield consolidated right now at about 4.1351 there, but that coming after its worst week since April last week. That even despite some of the comments we got over the weekend from U.S. Treasury Secretary Scott Bessent, trying to dispel any concerns potentially about U.S. growth, actually saying that this year has been quite a great year for bonds. So quite a lot to pay attention to as far as U.S. Treasuries goes. The Bloomberg dollar also in focus, extending last week's decline, that coming after the greenback capped its fourth weekly decline in 5 on Friday. And we're watching closely ahead of that Federal Reserve decision, potentially what the dollar does, especially as we've seen some muted activity for the greenback over the past few weeks. And let's just finish on Brent crude, trading just below $64 a barrel there, up about 0.2%, just over 0.1% there. That follows a weekly gain last week, and there are still quite a bit of conflicting narratives as far as what is putting pressure on the energy sector and oil in particular. Of course, we are seeing U.S. stockpiles up and the effect of the Ukraine-Russia war still putting some pressure there on Brent crude. And let's just finish on our terminal chart for this morning, offering a different narrative than what we've been talking about over the past few weeks. We've been focusing on the rally for gold, but what's been interesting for most of our team here has been what we've actually been seeing from silver and copper, actually outpacing the rally that we've seen from the yellow metal, as we've been seeing some pure supply shortages driving faster appreciation rather than concerns around some of the central bank debasement trades that we had been talking about just a few weeks ago. So that's just a look at what we're seeing in the metal space right now. But let's zoom in on how markets in Asia are faring. It's been quite a busy morning for Min Min Lo over there. She's standing by in our Hong Kong studio with more. Min Min, what are you watching?
Hey Jen, happy Monday. We are seeing Asia markets just tentatively a little bit higher today as we look ahead to the Fed meeting this week. But you can see here, I'm focusing on Japan in particular because there are a couple of news that are shaping markets today. One is the escalating tension between China and Japan because we have news of a Chinese fighter jet training its fire control radar on a Japanese plane. That's one. But the other is the GDP data from Japan coming in at negative 2.3%. The first contraction in 6 quarters, worse than the initial reading, and this certainly is bolstering bets that the upcoming BOJ meeting could see a rate hike, but a one and done. And so we are seeing the yen strengthening just slightly at the 155 handle right now. We are seeing rotation from the Nikkei to the topics here. Nikkei is pretty much flat, but topics is really supported by some of the banking sector that would benefit from a rate hike. But flip the ball, we're also watching the Chinese markets because we are digesting the macro data from the trade side. We did see exports beating estimates by a huge margin, but imports missing estimates. But overall, pretty positive numbers. We are seeing onshore extending gains to almost 1% here. We are seeing the yuan strengthening a little bit, but largely unchanged here. And it seems like investors perhaps still taking the cue from the PBOC, which has been trying to moderate the pace of the appreciation of the yuan.
Min Min Lo in Hong Kong for us. Min Min, thanks so much. We'll check back in with you in just a bit. But coming up, we speak to BNY's Hani Kablawi at Abu Dhabi Finance Week. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Let's dig into some market insights and turn to Abu Dhabi Finance Week, where we find Stephen Dainton, President and Investment Bank Management Head at Barclays. Stephen, thanks so much for joining us. So this week, this event is, of course, very critical for a number of investors, yourself and I'm sure the bank included. Talk to us about what the mood is like on the ground right now, what the expectations are leading into this event.
Well, Jennifer, firstly, thank you for having me here. You're at an extraordinary event, ADFW. A lot of people obviously focusing on the central bank activity that is taking place over the course of the next 2 weeks. Obviously, most of the major G10 central banks are making decisions and communicating those into the marketplace. But you also have a number of very substantial themes going on here. One is obviously AI and the impact of AI from a structural perspective and a growth perspective. The second thing is market volatility and the theme into 2026, given the fact that you've had most of the world's major equity markets up very materially this year. And I think you will see a focus through the course of this week here on the impact that this region can have, both on that investing cycle in some of those major structural shifts that are taking place.
Maybe let's just pick those apart, Stephen. Let's just start with the region because, of course, Barclays is focused in on Europe, but increasingly we're seeing Barclays expanding its presence. I was speaking to Amal Prabhu here in South Africa not too long ago about sub-Saharan Africa. What does the GCC provide for the bank?
Well, look, I mean, we've been at Barclays in the Middle East for 50 years, and we've celebrated that actually this year, which is extraordinary. But what you are seeing here is a culmination of capital formation, finding a route to some of the major structural changes that are taking place in and around technology and energy, which I think is crucially important. And critically, those two themes are now indelibly interlinked as we look towards 26 through 2031. I think some of the plans that you've seen from the UAE in general, whether we're here in Abu Dhabi, that have invested substantially in both of those transformational events that take place over the course of the next 5 and 10 years, I think this region is going to be absolutely critical to determining a lot of the outcomes over the course of the next 5, 10, 50 years along those two very important vectors of technology and energy.
What are some of the deals then Barclays is looking to get in on? You mentioned the AI trade. Are there potential deals that you're speaking with clients about this week that could come out?
Well, look, I think all clients are very focused on the end-to-end of this industrial revolution. And the end-to-end is not just the chip manufacture, the structural elements of the deployment of AI in any business model, and that is the industrial pillars that every industry will be deploying AI in and around their own organizations. But the end-to-end of that, the supply chain, the energy demand, the creation of energy, whether it's data center capacity, whether it's energy creation, in all of its forms, is going to be critically important for every single corporate to establish their own route forward. And I think that requires an enormous amount of capital. Capital formation here in this region is substantial, and finding those routes to the newer technologies, the deployment of that capital in every part of that structural change will be critical. And I think here you will hear over the course of this week a number of organizations finding that capital, advertising the routes forward and where they intend to deploy that capital. And I think that that is a really exciting protocol as we explore the next 3, 4, 5 days here.
What's the expectation, though, for capital expansion? I mean, give us some insight, Stephen, into what that actually looks like.
Well, you've already seen very substantial investments from Abu Dhabi, from Saudi Arabia here over the course of the last 6 months. So you've seen the investments in data centers. This region is emerging not only as a major technology hub, but a transformational energy hub in and around that end-to-end, as I mentioned before. So I think that from the perspective of where capital finds those avenues, this is really at the start. The energy of that coming from here that I think is truly transformational. And it's moving very, very fast.
All right, we'll leave it there with you. Stephen Dainton, Barclays President and Investment Bank Management Head, joining us there at Abu Dhabi Finance Week. Stephen, thanks so much for joining us. Now, for a look at some of the other stories we're following this morning, President Trump has raised potential antitrust concerns for Netflix's planned acquisition of Warner Brothers. The $72 billion deal would combine the world's top streaming player with the #4 service, HBO Max, which has raised red flags from regulators. Trump confirmed that he met recently with Netflix co-CEO Ted Sarandos.
But he's done one of the greatest jobs in the history of movies and other things. And he's got a lot of interesting things happening aside from what you're talking about. But it is a big market share. There's no question about it. It could be a problem.
Coming up, we speak to BNY's Hani Kablawi at Abu Dhabi Finance Week. That is next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. It's time to head back to Abu Dhabi Finance Week, which has kicked off today. One of the speakers at the event is Hani Kablawi, BNY's head of international. He joins us at the event now. So, Hani, thanks so much for being with us, especially ahead of this event, this panel that you're speaking on later today about the potential risks associated with the convergence of trade, tech, and geoeconomics. Talk about some of your insights into that and what some of the information you're planning to provide during that session are.
Sure, Jennifer. It is a big topic, maybe starting with the geopolitics and geoeconomics. We at BNY track $58 trillion worth of assets under custody and administration. We aggregate, anonymize, and draw real-time insights from that data. And the data basically tells us that flows into the U.S. continue to be active, healthy throughout the year. There's been a couple of months when there's been some corrections. April obviously was an off month. We saw some corrections, maybe profit taking, a little bit of risk off in November. But let's call it $650 billion worth of flows into the U.S. this year. And it's primarily into U.S. stocks, and within stocks, yes, it's concentrated in the big tech, but actually there's some other sectors that are benefiting from those flows. I think dollar-linked currencies and economies are doing quite well. The commodity trades are very healthy. Obviously, we are in the Gulf region. We're in Abu Dhabi today. Abu Dhabi continues to grow at a very healthy clip, and obviously their investments, broad and deep in certain sectors, they've placed bets, chips on the table, and we're gonna continue over the next few years to see the benefits of those bets being placed.
So, Hani, if we are continuing to see healthy flows into the U.S., what has been the result of some of the rebalancing and the reshifting of trade dynamics this year?
Yeah, I mean, I'm not sure the trade tariff policy has worked out fully to administration's expectations. But I think what the year has shown is a pragmatism taking over during the year as things have played out. We've seen more recently the China trade, for example, balancing out again, and the one-year truce in trade tariffs. I think more broadly, the reality is you've got, and I think it's you have to be brave to be a bear. These days. So you're looking at a Fed easing cycle, at a deregulatory or deregulating cycle. You've got fiscal growth being put on top of that, and so a lot of things coming together to suggest that, and then you've got the Genesis Act and obviously the Digital Assets Act clarity and its and the Genius Act before it, all of which are just directionally calling for a favorable environment investing in the U.S. at this point in time. There are risks, Jennifer, and the risks are effectively over investing in certain sectors or in certain segments within sectors. Data comes to mind, AI comes to mind, right? The macro trade is a good one, but then within that are all the micro trades that are happening, smart and thoughtful. And then the other is the credit, potentially too much money chasing too few credit opportunities. Those are the risks that we'd call out.
Do you think the GCC then is the ultimate beneficiary of this current environment, or are you seeing potentially some other regions that are benefiting from this current backdrop?
Yeah, look, I think a few places, emerging markets more broadly. We also like some of the emerging/developed markets. Japan, Korea, Taiwan are all doing well. China clearly has a strategy to drive their current account surplus to 1% of global GDP. That is the most any country has ever had in the history of trading. That's going to have an negative impact, by the way, on some countries. Positive impact on some, but negative impact on other countries. Europe, I would call being a potential risk from a China trade practices perspective. But back to your question on the GCC, I do think this is a very good environment for the GCC, I think, broadly speaking. But then within the GCC is not one thing. It's a very heterogeneous, at a high level, the farther away you are from the GCC looks like one trade. Maybe it's a commodity trade. But actually within the GCC, there's a lot of things happening on a country-by-country level that are really all about diversification of petrodollar economies into healthcare, education, tourism, services sectors, and other areas that I think are quite exciting. Here in Abu Dhabi, the digital assets race, the AI and data race are really exciting, and they're differentiated versus what other places in the GCC are doing. So macro, GCC positive, micro, Abu Dhabi double the positive.
And you have to be brave to be a bear. Great quote from you. Hani Kablawi, head of international at BNY. Thanks so much, Hani, for joining us ahead of your panel at Abu Dhabi Finance Week. Now let's turn to some other news. Chinese and Japanese ties have come under further strain after a Chinese fighter aircraft trained fire control radar on Japanese military jets for the first time. The incident is set to further fuel tensions between the two nations, sparked by the Japanese premier's comments last month. Tokyo suggested it could deploy its military with other nations should China attack Taiwan. Stephen Engel is Bloomberg's chief North Asia correspondent, and he joins us now from Hong Kong. So, Stephen, what's the latest latest on these two sides trading accusations about this fighter jet incident? Bring us up to speed.
Yeah, both China and Japan have different narratives around this incident and incidents that happened on Saturday just south of Okinawa in international waters. Essentially, one of China's aircraft carriers, the Liaoning, was in those waters south of Japan, sort of near Taiwan, doing some training exercises. This is file footage here of the J-15 jets taking off from the Liaoning. So a similar situation. But because they were doing these live training exercises at a time of increased tension between China and Japan, the defense forces of Japan in Okinawa scrambled F-15 fighter jets just to kind of make sure that the Chinese jets didn't go into airspace controlled by Japan. Well, China claims that those Japanese jets got too close to them and caused an unsafe situation. And then, of course, the Japanese are saying, as you rightfully said, that the Chinese jets locked at least twice on two different jets, essentially trained their fire control radar on two different Japanese self-defense force fighters. And that is considered a hostile act because it's the next step, it's the first step before actually firing and potentially shooting down a hostile adversary. So it has raised the tensions for sure. China, on the one hand, says Japan's overreacting and trying to stir up tension and mislead the international community, saying it's ill-intentioned, whereas Japan saying, look, you locked live on our fighter jets in a very sensitive time, in a very sensitive part of the world. So again, Japan has summoned to complain to the Chinese ambassador to Japan. So there's going to be a number of different moves here to voice their displeasure. Unfortunately, it did not end in disaster. But again, it's these kinds of events we have to keep an eye on because tensions are extremely high between Tokyo and Beijing right now because of those Takeichi-san comments that you mentioned about Taiwan, and Japan is not backing down. China is not backing down.
Absolutely. Quite a lot to pay attention to there. Bloomberg's Chief North Asia correspondent, Stephen Engel. Stephen, thanks so much for your reporting there. Now, for a look at some of the other stories we're following. U.S. President Donald Trump says he's disappointed in Ukrainian President Volodymyr Zelensky's handling of a U.S. proposal to end the war with Russia. Washington says its negotiators have agreed with Kyiv on a framework of security arrangements and discussed deterrence capabilities. Trump also says Russia is, quote, fine with the proposal, but President Vladimir Putin says the U.S. plan includes concessions Russia couldn't agree to. And coming up, we'll discuss the state of the EM debt market with Victoria Harling, Middle East CIO and co-head emerging market corporate debt at 91. That's next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks trading cautiously to start a week dominated by central bank decisions, including a likely cut from the Fed. U.S. President Donald Trump raising potential antitrust concerns over the Netflix Warner Brothers deal, saying their combined market share, quote, could be a problem. And Qatar Airways names a new group CEO in a surprise shakeup in the aviation industry. It's just gone past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersetchi, and plenty to pay attention to this week, including those central bank decisions from the Federal Reserve to also the RBA, as well as Switzerland and Canada we're paying close attention to. But let's just see where we are looking at. Our markets are positioned right now ahead of the trading week. U.S. equity futures marginally up on the day, though that follows a week where we did see most of the major indices in the U.S. Closing higher, and that expected quarter point, or the expectation of a quarter point cut from the Federal Reserve later this week potentially can provide some upside for U.S. equities. So S&P futures up just shy of 0.2% there. The U.S. 10-year yield not doing too much right now, but still we are paying close attention to global bonds, potentially seeing some more retreat over the past few days as we get those central bank decisions. The U.S. 10-year yield at 4.1390 after its worst week since April. That even, despite what we heard from Treasury Secretary Scott Bessent over the weekend, that U.S. Treasuries have had quite a good year. So plenty to pay attention to as far as bonds goes. The Bloomberg U.S. dollar index still quite in focus, marginally down on the day, extending last week's decline. That coming after we did see the greenback continuing in its weekly declines. Its fourth weekly decline in 5 is what we saw on Friday. And again, the dollar is going to be quite in focus as we do get some insight into the Fed's potential path ahead, and also, of course, that decision from the committee. And let's just finish there on Brent crude, marginally up on the day, not doing too much, trading at just below $64 a barrel there. But let's bring you our terminal chart for the day, offering a bit of a different narrative that we've been focusing on over the past few weeks. We've looked at gold, but copper and silver potentially also one to pay attention to. Their rallies outpacing the yellow metal as we do see pure supply shortages actually driving faster appreciation. Despite some of the concerns that we did get a few weeks back about some of the debasement trades from central banks. So that is just a look at what we're seeing as far as commodities goes, and plenty to pay attention to as far as copper, silver, and of course gold. Let's check in and zoom in though on how markets in Asia are faring. Min Min Lo is of course standing by in our Hong Kong studio with more. Min Min, what are you watching?
I'm watching the Chinese markets because we just got fresh lines that broke a couple of minutes ago. The Politburo pledging more proactive fiscal policy and moderately loose monetary policy. And that certainly sounds like perhaps rate cuts could be on the horizon. We are seeing the onshore markets extending gains here. You add to that, we had very strong trade data out this morning. The exports data coming in at 5.9%, widely beating the estimates of about 4% or so. Also reversing the losses that we saw, or the declines that we saw the previous month, right? It was -1%. So things are looking quite positive on the export front. Import missing estimates though, and that continues to show you the challenge that the Chinese economy has in rebalancing the economy. We are seeing the yuan strengthening just slightly here at the 706 handle. Yields pretty much flat at the moment. But what else we're watching in the Chinese market is the financial sector. This is certainly something that has moved markets this morning. We have two separate pieces of news of government regulations easing. The insurers are now seeing their risk factor reduce for them to hold long-term stocks. At the same time, the brokerages are seeing their leverage limits extended, especially for clients. So that means two different sources of inflows into equities from the brokerages, clients, as well as from insurers. So that's positive for onshore markets. We are seeing rotation from H shares to A shares, and you're seeing the financial sector also rallying off late. I believe the BI index of brokerages this morning was up about 3.8% or so.
Quite a lot going on in your region, Min Min Lo. Thanks so much for bringing us up to speed in Hong Kong there for us. Let's, though, head back now to Abu Dhabi and speak to Victoria Harling, the CIO for the Middle East and co-head of emerging market corporate debt at 91. Victoria, thanks so much for joining us. So we've spoken with quite a few guests this morning about just a few of the themes that are in focus at ADFW. When you look at 91 and sort of your portfolio position, what is it that you're focused in on for this week?
Yeah, I think we want to understand a little bit more on how the economies are going to continue to diversify. Certainly what we're seeing in credit portfolios is much more issuance expectations from sovereigns and banks as they look to expand their economies and need financing. So one of the key focuses for us is to understand next year the entire issuance landscape and who's going to be borrowing what in order to deliver diversification in the economies here away from oil, which is the next decade's sort of theme for growth here in the GCC.
Are you confident we are seeing in the GCC diversification away from those oil sectors, or potentially is there still more room to go on this front?
No, I think one of the key things that we'll hear a lot of here is here in Abu Dhabi how the Falcon economy is evolving, but a lot on AI. You know, we've got pilots next year of eVTOLs, so air taxis that will start to shape the economy. So there is real transformation happening. There's obviously, with the whole tech space, the need for much more infrastructure and renewables. That's definitely going to drive some of the key growth of the region, and just really attracting new long-term capital into these economies as they really start to diversify. It's real and it's happening, the speed of which we need to monitor quite closely, but very optimistic for growth in the region for the next 12 months.
Victoria, over the weekend we heard from Jamie Dimon talking about some of the concerns as far as Europe and potentially the U.S. goes. When we look at DM versus EM growth, do you think there are more tailwinds for EM at this current moment in terms of capital deployment and allocation?
Yeah, and I mean, it's been one of the themes for 2025 in terms of the global south and where they have their allocations. This region particularly has 40% of sovereign wealth fund, global sovereign wealth fund assets under management. And when you look at where that money has been deployed, the US has been a favoured investment destination for some time. I think what we're starting to see is those tailwinds sort of shift towards the east much more. We've seen within the GCC and Asia much stronger relationships start to build, and with that we are actually witnessing new allocations into emerging markets away from the US, just simply rebalancing from some of those overweights that have been in place for quite some time, and that's a theme we expect to continue firmly beyond 2026.
Is 91 focused in on corporate debt, sovereign debt? I mean, where do you see potentially the biggest opportunity heading into 2026?
So I think if you just take the aspect of where we are on the global platform, you know, we've come down in rates quite meaningfully. The economies look pretty stable. Inflation is normalizing. Growth is normalizing. And so it looks like a great year for carry per se. So any high yield should do quite well. However, there are quite a few tailwinds or headwinds, you know, depending on how the economies start to evolve, we could sort of turn down or pick up that might translate into either Treasury movements to rally further, and we could see, you know, more rate cuts on the horizon should we see growth sort of turn down, or we could see growth start to pick up again, and then we could see Treasuries widen a little bit, rise from here. So I think the markets are positioned for that sort of nothing to see here carry, and that should really bode very well for emerging markets. I think if we're looking on the local currency side, there's still a lot of high yielders that where there's room to cut, and so there will be winners and losers in local currency, but for sure there's room to play in all aspects of the market. So for us, we like credit across the board, but still with a bias towards high yield, and think that that's the way that we will deliver strong returns next year.
All right. Victoria Harling, Middle East CIO and co-head of emerging market corporate debt at 91, joining us there at Abu Dhabi Finance Week. Victoria, great to speak with you. Thanks so much. Now, in a surprise shakeup in the aviation industry, Qatar Airways has named Hamad Ali Al Khater as its new group CEO. Al Khater will succeed Badr Mohammed Al Mir, who spent just 2 years in the post. Let's bring in Lean Al-Rashdan, Bloomberg's Middle East aviation reporter. So, Lean, what is the reason for this move, and why did it come as such a surprise for many people who are watching this airline and the industry more closely?
Good morning, Jen. Yeah, this move came as a surprise to a lot of people. It's not common for these big airlines in the Middle East to change leadership. The previous CEO before Almir, Akbar Al-Bakr, had spent 27 years at the company. So Badr spent a mere 2 years, and then he exited the company. During that time, they did not specify the reason for the move. They did not specify where Badr will be heading, after the CEO role. But during this time, there were a lot of tensions in the Middle East. The Qatar airspace closed. That left thousands of passengers stranded in Doha. Badr had some investments in some smaller carriers. He divested from Cathay Pacific, and he's had some personnel changes. He's changed some rules inside the company. So those were a lot of the decisions that the board would have been looking at when they made these changes. As for the new CEO, it was, he's a newcomer. He's only been at the company for 2 years, so that was also surprising.
Well, and Lean, we know that, of course, any new change at this airline has to have the blessing of the state of government, the government of Qatar, excuse me. What do we know about this new hire? You mentioned he hasn't been at the company that long, but what's sort of his background that we do know?
Yeah, in the aviation industry, anyone who follows, that a lot of, if there's a CEO, especially to one of these big airlines, they're usually born and bred in the company, or they've at least managed other airlines. Al Khater has only been at the company for 2 years. He was the COO of the airport, and before that he worked at Qatar Energy. Now, of course, the chairman of the board is also from the chairman of Qatar Airways from Qatar Energy, so they have that kind of relationship from the previous company. And before that, it was just other oil and gas. He was working in the oil and gas industry. So this will really be his first time running an airline, and he's only been in the COO role at the airport for almost a year. So this is going to be quite new to him, and it'll be interesting to see what changes he makes along the way.
Wow, massive shakeup at one of the biggest airlines in the world. Al-Rashdan, Bloomberg's Middle East aviation reporter, joining us there for the latest on Qatar Airways. Thanks so much. Now, coming up, Abu Dhabi is rewriting the sovereign wealth investing playbook. We'll have that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasadja in Johannesburg. Deep pools of wealth is giving Abu Dhabi unprecedented sway over global finance, energy, and AI. With 3 sovereign wealth funds and a raft of new entities pouring billions into strategic industries, the emirate is becoming a dominant investing force. For more, Bloomberg's Alex Dueller joins us now and is one of the authors of the Bloomberg Big Take. Alex, thanks for being with us. So what's driving this rapid expansion of Abu Dhabi's global financial influence?
Yeah, thanks for having me on, Jennifer. So it's a really interesting time for Abu Dhabi. Collectively, Abu Dhabi kind of controls almost $2 trillion of sovereign assets, and a lot of that money is being ploughed into various different sectors, and especially into AI and infrastructure. And Abu Dhabi is super ambitious in trying to go after some of the biggest deals and some of the most exciting parts of finance at the moment. So we're at Abu Dhabi Finance Week, and there's certainly a lot happening and a lot of announcements coming through.
Well, and we've already seen some of those announcements coming out. Can you talk about where Abu Dhabi is maybe focused on deploying capital at this present moment, and maybe where things are heading?
Yeah, for sure. So Abu Dhabi has many sovereign wealth funds. It has 3 main sovereign wealth funds. One is ADIA, the $1 trillion investing entity, and then we also have Mubadala and also ADQ. But then also Abu Dhabi has now ventured into various sector-specific sovereign wealth funds. So we have XRG focused on energy, we have MGX focused on AI. So Abu Dhabi is ploughing money into very specific sectors and is being super ambitious. So we tracked a lot of the deals going on over the past few years, and AI has become one of the big focuses of Abu Dhabi, and it really wants to be a leader in that field.
And And we, of course, know that that's going to be a big theme at Abu Dhabi Finance Week. Bloomberg's Alex Struhler. Thanks so much, Alex, for joining us from Abu Dhabi Finance Week. Now, McLaren driver Lando Norris clinched his first Formula One title at the season-ending Abu Dhabi Grand Prix on Sunday. Norris finished third in the race behind his McLaren teammate Oscar Piastri in second, and Red Bull driver Max Verstappen, who won the race. And coming up, Benin foils a coup attempt months before national elections. We'll have that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Ethiopia says it aims to conclude its debt restructuring process by mid-2026. Finance Minister Ahmed Shahide says the authorities are making strong progress with official creditors while talks continue with private lenders on an overhaul of its loans. The IMF, meanwhile, praised Ethiopia's efforts and expects growth above 7% this year and next. Nigeria plans to review its capital gains tax, which is set to come into effect at the start of next year. The move comes after stakeholders, including the nation's stock exchange, called for a moratorium because of concern it will deter foreign investors. The Nigerian Exchange Group called for either the removal of the tax or a deferment for 5 years. The government plans to impose a 30% levy on the sale of Nigerian shares unless the proceeds are reinvested in other listed or unlisted domestic equities. And the IMF says it's aware of rising concerns among bondholders that Senegal may need to restructure its debt. The fund says it discussed the country's significant debt vulnerabilities during recent talks in Dakar, even as negotiations on a new IMF program continue to make progress. Now, Benin has thwarted a coup attempt by military officers who claim to have ousted President Patrice Talon months before national elections, in which he is due to hand over to a successor. For more, let's bring in Bloomberg's Andira Oganga, who joins us now from Kigali. Andira, what more do we know about this incident? Walk us through it.
Good morning, Jennifer. So up until last evening, there were so many unknowns until the president came in and did a State of the Nation address, calming down the tension in the country. But what we saw unfold in the last 48 hours is a faction of the military charged to the capital city, went to the National Broadcasting Corporation and announced that they had taken over the country, and now they were going to close the borders, realign institutions, and they were going to be in charge. But that also did not last long. Quickly, we saw the Minister of Interior come and say that these efforts had been thwarted. Now, it's important to know that this coup did not happen in a vacuum. When these military men were addressing the nation during the state broadcast, they raised a couple of issues. They said their security concerns, the insurgency from Niger and Burkina Faso is leaking into the country. They also raised questions of economic mismanagement and also raised widespread abuse. So the situation remains very fluid because on one hand, the government is saying normalcy has resumed, but on the other hand, gunshot was still being reported near the presidential residency as of yesterday morning. And as much as authorities are trying to downplay this coup, urging residents to go about their life, go to church, reopen their businesses, this coup is going to have an impact on the country, particularly investor perception. There's a risk aspect that is going to be introduced into this. And on the other hand, the country's Eurobonds could likely take a hit, $2.6 billion maturities over a lengthy period of time. But the moment you introduce the aspect of risk, then yields could be affected and repayment period, depending on how elections or other coup efforts pan out. And it's not just that. This is a country that has been dubbed as a little bit more stable in comparison to Niger and Burkina Faso. And 4 months into an election, and they're seeing a military coup, it's likely to throw a spanner in the wheel on how the political architecture of the country is going to unfold.
Sure. And of course, Andira, potentially how this could affect the region, right, and other military power grabs that we've seen, which you were sort of alluding to. How do you see this potentially playing into that picture?
It's part and parcel of that, and the script is just unfolding as things go. You look at election processes in West Africa, they are no longer the guaranteed and stable way of power transition from one administration to the other. If we just start with Benin in 2021, when there was a re-election, President Patrice Talon barred the opposition leader and former president from vying. He won with a majority of 86%. This is nowhere near the veneer of practicality. And now as they head into another election, he has handpicked the Minister of Finance to be his successor. He's again barred opposition from vying, and he's almost set the table for continuity of government. And we've seen the same in Ivory Coast, in Togo, in Cameroon. And this is part of the reasons why we are seeing the rise of these military coups. And even though, let's say, for example, in Guinea-Bissau, where we have seen the latest military coup, the military leader saying it's only a year and there'll be transition, history points to another direction. You look at Guinea, Mamadou Ndoye came into power through a military coup 4 years ago, promised there'll be a transition. He's tweaked the constitution. He's now looking at 14 more years in power. And this is not new. Elections and constitutional reforms are now being used to entrench and legitimize the power grabs that we've seen from military governments. And military coups are now spreading. We've seen it in Mali, we've seen it in Niger, Burkina Faso, in Chad, in Guinea-Bissau. And even though we are seeing consequences, particularly from ECOWAS and AU being frozen and suspended from the bloc, there's so much incentive. You get to control power, you get access to minerals, you control the country's finances. So the risk here is very little in comparison to the reward. And until there are serious consequences and repercussions, we are likely to see this trend continue.
Yeah, really great reporting as always. Bloomberg's Ndiro Oganga in Kigali, Rwanda. Ndiro, thanks so much for joining us. That's it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.